Welcome to the Deep Dive. Today, we're really connecting some big dots, huge geopolitical moves, this incredible rush to fund national security tech, and, well, some pretty important signals about consumer caution and that K-shaped economy we keep hearing about.
Absolutely. We've got sources covering quite a range today, everything from the Middle East peace talks and U.S.-China trade stuff right down to, 401k investor moves, the crazy cost of new cars, and even the surprising social impact of Lego.
Right. So our mission here is to sort of unpack all these seemingly separate stories, find those underlying threads, and give you the essential nuggets you need to stay informed.
We'll be talking about what it means when, the average new car costs over 50 grand, what exactly JP Morgan is up to with its $10 billion plan, and this really interesting demographic shift happening in the construction industry.
Okay, let's dive in. First up, Section 1, Global Stability and Security Initiatives. And we have to start with the sheer scale of global engagement just this week. Monday, October 13th, 2025, President Trump traveling to Israel and Egypt. Big news.
Huge news. Finalizing a peace deal for Gaza, marking a ceasefire. It was definitely called a historic day. And the core elements, they really signal a major strategic shift.
Okay, what are those key elements?
Well, you've got the expected release of 20 Israeli hostages after more than 2 years in captivity, plus the remains of 28 others being transferred.
And in return?
In return, Israel's releasing almost 2,000 Palestinian prisoners and detainees. It's a significant exchange.
In the language used, it sounds very definitive. Trump declaring the long and painful nightmare over, even saying the war was, yes, over, and that Hamas will disarm. What's sort of long-term strategic takeaway here?
Yeah, the language is strong. I think the takeaway is really about setting priorities. Trump explicitly said Israel had won all it could by force of arms,
Okay.
and that the total focus for Gazans now has to be on restoring the fundamentals of stability, safety, dignity, and economic development. And the U.S. intends to help with that.
So that really sets the stage for that international summit in Sharm el-Sheikh, Egypt, right? Trying to finalize the Gaza deal, asking everyone to put, quote, old feuds and bitter hatreds behind us.
Exactly. But if diplomacy is the main tool in the Middle East, we saw a different kind of tool, financial muscle, being used in South America almost at the same time.
Right, the Argentina situation, the U.S. Treasury stepping in.
Yeah, extending a $20 billion currency swap line to Argentina's central bank. Basically, the U.S. is swapping stable dollars for Argentina's volatile pesos. It's a lifeline.
A lifeline aimed at addressing liquidity issues and, well, propping up the allied government of President Javier Milei before their elections.
Precisely. And it's a big deal. The sources point out this is the first U.S. intervention of this specific kind, this currency swap, since they bailed out Mexico way back in 1995.
That really tells you something about how strategically vital Argentina's stability is seen right now.
It does. And, that brings us to a third tool possibly being deployed, potential military escalation elsewhere. We're expecting a White House meeting this week, Trump and Ukrainian President Zelensky.
And they're discussing further military aid.
That's the expectation.
Yeah.
Specifically, considering the approval of Tomahawk missiles.
Tomahawks, those are the subsonic cruise missiles, right? About 1,000-mile range.
I hope that's them. So the overall pattern is, well, it's fascinating. You've got the U.S. pushing hard for peace deals in one region, using major financial leverage to back allies in another, and then considering ramping up military pressure in a third.
It's an incredibly active, sort of three-pronged strategy for managing global stability, it seems.
Definitely.
Okay. Section 2, the critical technologies race and corporate strategy. But, all that global stability work doesn't mean much if your tech supply chain is vulnerable. Which brings us squarely to rare earths.
Ah, yes, the rare earth elements. Critical inputs, as you said, for everything from weapon systems to EVs, robotics, all sorts of electronics.
And this has been a major friction point with China recently.
Huge friction. China put new export controls on these rare earths, and the reaction was, well, immediate and pretty severe. Trump threatened 100% tariffs starting November 1st.
And that threat alone wiped, what was it, $2 trillion off the stock market on Friday?
$2 trillion, just like that. Incredible volatility. Now, stocks did surge back on Monday after Trump sort of softened his language, saying relations will all be fine. But the underlying problem, that dependency, it's still there.
Yeah, and we saw Wharton professor Jeremy Siegel call this out very directly.
He did. He called it scandalous that the U.S. lacks a strategic reserve for rare earths, pointing out, China processes something like 90% of the world's supply.
And this isn't just about iPhones, is it?
Yeah.
It's a fundamental strategic vulnerability for defense, for advanced manufacturing.
Exactly. So how's corporate America reacting? Well, we saw a really extraordinary commitment from JP Morgan Chase.
Tell us about that.
They announced a huge, decade-long $10 billion investment plan. It's actually part of an even bigger $1.5 trillion initiative they're calling the Security and Resiliency Initiative.
Okay, $10 billion focused where?
Focused squarely on four areas they see as critical to U.S. interests. Defense and aerospace, what they call frontier technologies, think AI, quantum computing, also energy tech, and advanced supply chain manufacturing.
So this isn't just like normal investing. This is a major financial institution explicitly aligning its own money with government strategic priorities.
Precisely. And the market reaction was immediate. Quantum stocks companies like Rigetti, IonQ, Arcoa, they just soared. Some jumps 10%, even 20% in a single day on this news.
That kind of rapid capital movement takes us right into the AI infrastructure arms race. Broadcom and OpenAI just announced a deal.
Right. They're going to jointly build and deploy custom AI accelerator chips. Deployment starts late next year, aiming to finish by 2029.
But here's a fascinating little detail from the sources. Broadcom's chip president confirmed that OpenAI is not the mystery customer they mentioned before, the one that placed that massive $10 billion order for custom AI chips.
That's right. So there's still some unknown entity out there with a $10 billion chip order waiting in the wings.
Which is huge in itself, but maybe dwarfed by the bet Oracle is making on AI infrastructure.
Oh, yeah. Oracle CEO Clay Magork sounded completely confident that OpenAI will be able to pay them $60 billion per year.
For cloud infrastructure.
$60 billion a year. That's part of that 5-year, $300 billion deal they have, right? I mean, is that even plausible? This source material mentioned OpenAI had a $5 billion loss in 2024.
Well, plausible might be the wrong word. It's less a bet on current plausibility, I think, and more a massive bet on future necessity.
Okay.
I mean, $60 billion a year, it's roughly the annual GDP of, I don't know, Croatia or something similar. The whole industry seems to be banking on AI demand, just exploding, generating revenue far faster than anything we've really seen before. It's a huge gamble, a massive gamble indeed. Okay, let's move now from those concentrated trillions of strategic tech to the reality hitting the average consumer's wallet. Section 3, diverging consumer and market signals. And this is where that K-shaped economy really comes into focus.
It really does. The divergence is stark. Just to remind listeners, the K-shape basically means high-income folks are doing great, their economic path is going up, while lower-income groups are struggling, their path trending down.
And the auto market seems like the perfect example, the top part of the K. The average price paid for a brand new vehicle just topped $50,000 for the first time ever last month, driven by wealthier buyers, high-end models.
Right. But then you look at the bottom stroke of that K and you see real stress. Auto loan delinquency rates for subprime borrowers, people with FICO scores under 620, they're nearing all-time highs.
How high are we talking?
We're talking 6.43% for loans that are 60 or more days past due as of August.
No.
These are buyers getting squeezed by high prices and really punishing interest rates, sometimes up to 18 or 20%.
Wow. And that caution, it isn't just showing up at debt levels, is it? It's also visible in retirement accounts, this 401k analysis from September.
Yeah, it found a really clear flight to safety. Investors strongly preferred bonds, money market funds, and these things called stable value funds.
Okay, maybe quickly explain stable value funds for folks who aren't familiar.
Sure. They're basically very conservative investment options you usually only find inside 401k plans. They're designed to protect your principal and give you steady, albeit low, returns. Often backed by insurance contracts to smooth out any bumps. Think of them like a money market fund, but within that tax-advantaged retirement setup.
Got it. So very conservative. And the data showed money flowing into fixed income, what was it, 20 out of 21 days, accounting for 82% of all the inflows.
Exactly, 82%. Bonds got 39%, stable value 25%, money market 18%. It's a really strong signal of investors wanting less risk right now.
Why do you think that is? Is it hedging against uncertainty? Worries about a government shutdown, the job market may be softening? Or is it just sensible rebalancing after stocks did pretty well earlier in 2025?
It could honestly be a bit of both. Either active worry or just disciplined portfolio management after seeing good gains.
Yeah.
The S&P 500 was up around 13% for 2025. But either way you slice it, the underlying mood is definitely cautious, risk-averse.
And the job market seems to kind of reflect this split view too, doesn't it? On one side, you have retail.
Right. Amazon planning to hire 250,000 workers for the holidays. That's the same number as the last couple of years. They're offering over $19 an hour on average for seasonal roles. That suggests they're pretty confident consumer spending will hold up, at least, among that upper half of the K.
But then you look at the more technical side, NASA's Jet Propulsion Laboratory, JPL.
Yeah, a very different story there. JPL announced layoffs about 550 employees, which is 11% of their workforce. They explicitly said it's about restructuring for a leaner infrastructure, maintaining fiscal discipline, not related to the shutdown threat, they noted.
So even in high-end R&D, government-funded science, there's significant belt-tightening going on. It's a mixed picture.
Definitely mixed.
All right, Section 4, micro-trends and societal impact. Let's look at some maybe smaller trends, but ones that point to broader shifts happening under the surface.
Yeah.
Starting with the auto sector again, but this time environmental liability.
Yes, the long shadow of Dieselgate continues. We're seeing a huge lawsuit kicking off in the UK. Over 1.6 million claimants are suing manufacturers like Mercedes-Benz, Ford, Renault.
And this is over the alleged use of defeat devices again on older diesel cars.
Exactly. On diesel models built between 2012 and 2017, the lawyers claim that the actual on-road nitrogen oxide emissions were way higher than the lab tests, up to 12 times the limits, they allege.
12 times,
Yeah.
wow. And the potential damages.
The claims are valued at around £6 billion, which is almost $8 billion US. It just shows that these environmental compliance issues can have massive, decade-long financial tails.
Definitely. Okay, shifting to construction. There's a really significant demographic trend highlighted in the sources.
Yeah, this is quite striking. Hispanic workers now make up nearly a third, 32% of the entire construction labor force in the U.S. That's way higher than their share across all industries, which is about 19.2%.
32%, that's a huge number. It really shows who is, quite literally, building America's homes and infrastructure, especially in certain regions, right?
Absolutely. The concentration is even more pronounced in the Southwest. In states like New Mexico, Texas, California, Nevada, that share is over 50%. It's a fundamental structural shift in a massive industry.
Then speaking of building, a small note on materials.
Right, just a little shift in what's popular for exterior walls on new homes in 2024. Vinyl siding at 26%, just barely edged out stucco, which is at 25%.
Okay, vinyl overtakes stucco, but what's the longer-term trend?
The one to watch is apparently fiber cement siding. It's currently third at 23%, but it's shown the strongest growth trend over the past 20 years. So gaining ground steadily.
Interesting detail. And finally, let's wrap up this section with something, well, kind of unexpected and quite positive, Lego.
Yeah, Lego as a therapeutic tool. It turns out these donated Lego MRI scanner sets, they've distributed over 10,000 kits globally, are having real success in pediatric care.
How so?
They help kids prepare for the actual MRI scan, which can be, really noisy and feel quite claustrophobic, especially for a child. Playing with the Lego model makes the whole process seem more familiar and less scary.
And there's research backing this up.
Yes. New research shows that 96% of healthcare professionals who use the sets say the model helps reduce anxiety in kids. But here's the really amazing part.
Wow.
46% of them also reported needing less chemical sedation for children who had played with the Lego MRI beforehand.
Less sedation needed. That's incredible. A simple toy having that kind of medical impact.
It's a really powerful outcome, isn't it?
Definitely. Okay, let's pull this all together in the outro.
Yeah, when you synthesize all these different pieces, what really jumps out is this profound split. On one hand, you see these huge, almost unprecedented diplomatic pushes for stability like the Gaza deal. And alongside that, this absolutely dizzying rush of private money pouring into areas defined by national security and AI.
Right, this incredible financial acceleration at the very top. Oracle betting hundreds of billions, JP Morgan committing $10 billion specifically to strategic industries, and all that's happening at the exact same time that the average consumer seems to be signaling deep financial stress. We see it in record subprime auto loan problems. We see it in people fleeing to the safety of bonds in their 401ks.
So what does this mean for you, the listener?
Well, if you're trying to understand the economy today, you really need to grasp how much capital flows are being shaped by government strategic priorities right now. There's big implications for market volatility, for investment trends, and ultimately for the resilience of the economy that, underpins your retirement savings. And it leaves us with a pretty provocative question, I think. Considering initiatives like JP Morgan's funneling billions into industries deemed crucial to U.S. national security defense, AI, rare earths, advanced manufacturing, what happens to innovation, to competitiveness, and all the other domestic industries, the ones that fall outside this new, very specific definition of strategic importance.
Yeah, could we be creating a sort of K-shaped industrial economy? where investment floods into these chosen strategic sectors, while other, perhaps more traditional or consumer-focused industries struggle to find capital.
It's definitely something to keep an eye on, something to think about as you watch how the markets and the broader economy evolve from here.